Good morning, everyone. I have 9 o'clock this morning, so I think we're going to get started so we can keep on schedule. It does look like we have quite a few participants still kind of clicking in, so hopefully they are able to join our program as we get going here. I'd like to start by welcoming you and thanking you for joining the webinar on CARES, what it means, what the Act means for you and your family. I am Heather Gessner. I'm the SDSU Extension Livestock Business Management Field Specialist, traditionally based out of the Sioux Falls Regional Center, today coming from my home office in Salem. Today I'm joined by Victoria Doubledy. She's going to do the main presentations today. She's at SDSU and in the School of the Ness School for Economics and Management, and she describes herself as an accounting instructor, a CPA, and a certified tax nerd. So I think you're all in for a treat today, having Vicki give our presentations. So with that, I think we can, we'll kick start and turn it over to Vicki and listen to her presentation and have her increase our knowledge a little bit here.
Wonderful. Well, thank you, Heather. Again, my name is Vicki Doubledy. I am an accounting lecturer at SDSU. I'm also a CPA who specializes in tax. So I do a lot of tax work during the tax season, aside from my teaching. And I've been working the last couple of weeks very diligently in getting up to date on the CARES Act. So let me start by sharing my screen with you here. And get my slideshow started. Okay, so again, today we're going to focus on both the individual and business provisions of the CARES Act, and I will do my best to answer questions for you at the end and as we go through. To begin with, the first thing that came out was that tax day was extended 90 days. So your taxes are no longer due on April 15th. They are due on July 15th. So that gives you 90 days to file your 2019 taxes. In addition, it gives you an additional 90 days to pay any balance that you may have due. So if you were expecting to have to pay on April 15th, you now have until July 15th. The odd thing about this is that your first quarter estimated taxes are going to be pushed with that to July 15th, but your second quarter estimates are still due on June 15th. So that's kind of unusual that your second quarter estimated tax payments will be due prior to your first quarter. But the first quarter estimates were pushed to July 15th. You have until July 15th also to make additional contributions to IRAs. So they extended that with it as well. If you still need more time, if you file an extension regularly, that deadline has not changed. That remains October 15th. I've included some links in here to IRS sites related to some more information about these provisions. And Heather, I believe will this presentation be made available?
Yes.
Okay, so then you'll be able to access the links. Okay, now, along with that, sorry, I'm getting ahead of myself. There are some tax credits available. There's some individual and business provisions available. There are some payroll tax credits that we're going to get into in a couple of slides. It has to do with paying your employees for sick leave. So they have extended the FMLA, so the Family Medical Leave Act, which allows for 12 weeks of leave. And what they are asking is that employers pay up to 80 hours of paid sick leave. Additionally, they want to expand that paid care for employees who may have to care for a loved one who is sick, or that may have to be home with children that are not in school, or that daycare is closed, those types of things. So there's some payroll tax credits available for employers offering this leave. You will get reimbursed on the tax credits when you file your quarterly taxes. So you will want to talk to your accountant about that and how to claim these credits on your quarterly payroll tax reports. And then if you happen to have less than 50 employees, you can be exempt from these requirements of the expanded FMLA. Now the individual provisions. Let's get started with that because this is where I've been seeing a lot of questions, these stimulus payments that are going to come out. The stimulus payments are $1,200 for single filers or $2,400 for married filing jointly, plus an additional $500 for each qualifying child. The qualifying child follows the child tax credit rules. So basically dependents less than age 17 as of December 31st. So if you happen to have a college age dependent on your return, they do not qualify for that additional $500. There's kind of a gap in there where they don't qualify. Additionally, if they are claimed as a dependent on your return, they will not themselves qualify for the $1,200. So that's been something that there's been a lot of questions on. It will be based, and I'm kind of jumping ahead here on the bullet points, it will be based off your 2019 return if you've already filed, or if you have not filed for 2019 yet, they're going to defer to your 2018 return. Now, this is a tax credit that will then end up appearing on your 2020 taxes when you file a year from now. You'll receive the tax credit. You'll offset the credit by saying, I already received the payment, and it should be a wash. The IRS is taking the stance that in the event that situations change, you lose a dependent because either they age out of it after in 2020 or something like that, that you will not have to pay anything back that you received. That's the stance. However, you could potentially get more when you reconcile this out on your 2020 taxes. So for example, let's say someone has a child in 2020, they may be able to get they should be able to get the additional $500 then when they file their taxes for 2020 and 2021. There is an income phase out for this payment. So for individuals that file single, it begins at $75,000, and the phase out is $5 for each $100 above the income threshold. By the time you're at greater than $99,000 for individuals or $198 for married filing jointly with no children, you've completely phased out of the stimulus payment. The questions have been, what if my income actually increases in 2020? When I reconcile this payment out, will I have to pay it back? Again, right now, the stance is no one's going to have to pay this back. The payments are supposed to start next week. The IRS has said that they will start processing, actually processing April 9th, which is today, with payments expected to arrive beginning next week. They are using direct deposit information on file for those taxpayers that received refunds in the tax years in which they're basing the stimulus payment off of. If you did not receive a refund and you had to pay in and you used direct debit information, that will not be used in order to receive your payment. So that bank account information will not be used. The IRS does have a statement on their, and you can find it in the link below on this slide, that says they are creating a portal that'll allow people to go and register their bank information online and update that. So if you were someone that has paid in the last couple of years, you will be able to update your bank information. However, as of late last night, that still was not available. So keep an eye on that. If someone does not have a filing requirement, so they just have Social Security or Railroad Retirement, the IRS will use that account information to process those stimulus payments, and they'll send the payments to those bank accounts. The direct deposits, of course, will all happen first, and then they'll start mailing paper checks. So if you do not update your bank information, or if you had to pay in the past, they will just issue you a paper check. Those are expected to start somewhere around July and go into the fall. Some additional individual provisions that have come up as part of the CARES Act is if you need to take a distribution from your retirement plan to help either cover loss of salary or something like that. And typically distributions, early distributions made prior to age 59 and a half have a 10% tax penalty. That tax penalty will be waived for coronavirus related distributions. And RMDs, required minimum distributions on retirement accounts, have been waived for 2020. If you already took your RMD for the year, you still have 60 days to put the money back in your account. So they have waived that. And another interesting thing that they threw into the act was an above the line charitable deduction. So typically charitable contributions are part of itemized deductions, and they're only going to benefit taxpayers that itemize. This $300 is an above the line deduction, meaning you don't have to itemize to take advantage of that deduction. And there was no stipulation that it has to be specific to coronavirus related charities. So that is put in the CARES Act for 2020 and going forward. So there is now a $300 above the line deduction for everyone for charitable contributions. So that's something that's quite nice in the CARES Act as well. Now, some of the business provisions. This is that tax credit I was talking about a couple of slides ago. In addition to the expansion of the FMLA, there are a couple of other things going on related to some payroll taxes. So we have some refundable payroll tax credits. We do have that FMLA expansion. If you're under 500 employees, all of this applies to you. Greater than 500 employees, it may not, except for certain specific industries such as the restaurant industries. Also, the 500 employee rule may, if it's franchised, may look at just specific locations for number of employees. So the government is, again, going to reimburse covering for sick leave of the employee or care for a loved one or a child out of school. So what they're going to do is the first 10 days or up to 80 hours, they are going to give you a credit of $511 per day or $5,110 for the full-time period. So you'll get a $511 per day per employee. The last 10 weeks, I say, FMLA is 12 weeks. So the first 2 weeks would be that 80 hours where you get the $511 per day. So the last 10 weeks of that can exempt employers from paying the first 2 weeks. You have a caregiver portion that's the lesser of $200 per day or 2/3 the employee's regular rate. So that's what you would have to cover that at. There, again, there's that hardship exemption waiver. Now, one thing on these provisions is you can delay payment of your employer payroll taxes. So I put in italics delay payment because I want to emphasize that that doesn't mean you don't have to pay them. It just means you don't have to pay them now. And so if you anticipate, if you have the cash now, this may be a strategy you want to discuss with your accountant, whether you just go ahead and pay those payroll taxes now or wait to the future. If you're having cash flow issues now, there's no guarantee that you won't be having additional cash flow issues in the future when those payments are due at the end of the year. There is an employee retention credit. Now, you cannot get this credit and get the loan forgiveness under the PPP program that we'll discuss in a later slide. So I want you to be aware of that. For some businesses, the PPP or the EIDL loan programs might be better options. But your first $10,000 of wages paid after March 12th through the year end can be subject to this credit. It's a refundable credit against your payroll taxes. So when you file those payroll taxes, you can get the credit against that and have less due. And it's available for operations that have been fully or partially suspended because of government order, or that have had more than 50% reduction in receipts or revenues. So this is separate from the lending provisions. It's related to credits for paying payroll taxes, but if you take this, you cannot get the loan forgiveness. So it is something you would want to discuss as a tax strategy with your accountant. A couple of other business things that have come up as a result of the CARES Act. The net operating loss provisions, which are kind of interesting. The Tax Cuts and Jobs Act stopped the carryback of net operating losses, and they were carried forward indefinitely. The CARES Act changes that, and any net operating losses can now be carried back 5 years and then carried forward again. So you can now, and they've also repealed the taxable income limitation on the net operating loss. So you may have to, if you've already filed for 2019, based on some of these changes, you may have to amend. Additionally, non-corporate taxpayers can deduct their excess business losses now arising in 2018 to 2020. So if that applies to you, you may have to additionally amend 2018. And the interest expense limit increased from 30% to 50% for tax years 2019 and 2020. So again, if that applies to you and you've already filed for 2019, you may have to amend. Okay, these lending programs. There are 2 lending programs that have come up through the CARES Act. The PPP, which is the Paycheck Protection Program, and the EIDL, which is the Economic Injury Disaster Loan. The PPP is, so Congress funded $349 billion for these lending programs. However, it's first come, first serve, and once the money is gone, they're saying it's gone. That's not to say they won't do another round of funding, but that's the way it's written currently. So the PPP program goes through the banks. So you need to talk to your local bank, but they have to be an SBA lender. So if you, a lot of the larger banks are working with these programs, but some of them have already maxed out on their funding amounts for these programs. So if you are interested in taking advantage of these lending programs, you need to speak to your banker and your accountant today. This money is moving fast and furiously. So it's an emergency loan program where you can continue making payroll for 8 weeks. It's going to cover that 8-week period beginning February 15th of 2020 through June 30th of 2020. You can get up to $10 million of the loan forgiven to cover 2.5 times the average monthly payroll costs. Any excess above these expenses is subject to an interest rate up to 4%. It's anywhere from 0.5% up to approximately 4%, but it's payable over only 2 years. So it has a very short term to it, and you can have up to 6 months of deferrals. Now, the big question has been on a lot of conversation back and forth since this only opened up last Friday on April 3rd, is what exactly is payroll costs. You measure the 12 months preceding the loan origination date, and you can include salaries in that amount. However, salaries over $100,000 cannot be included. Commissions and tips are included. And employee benefits such as health insurance premiums and retirement benefits are included in that calculation, as well as any state and local taxes. It does not include the employer portion of FICA taxes. While that is a business expense, it is not included in this calculation for whatever reason. That's how it was written. Wages paid to temporary migrant workers on an H-2A visa cannot be included, and payments made to independent contractors cannot be included. The reasoning there is they may be able to qualify for some of these programs separately. In addition to covering payroll, the PPP can be used to cover other designated business operating expenses. Specifically listed are mortgage interest obligations, rent, or utilities. Those are specifically listed as uses of the PPP funds for the expenses for the business. Again, if you are interested in applying, this particular program goes through your local lenders if they are an SBA approved lender. So you will want to contact your bank. Now the EIDL. The EIDL is a very simplified application on the SBA website. It includes a loan advance of $10,000, which they're considering a grant. So it's a forgivable loan, meaning you may not have to pay that $10,000 back as long as it's used for qualified business expenses. You cannot use the PPP and the EIDL towards the same expenses. It's sort of like double dipping. So if you're using the PPP to cover your payroll expenses, you can't turn around and apply for the EIDL for those same expenses. Same thing with the operating expenses. It will net out the forgivable portion of the PPP, and you may end up having to pay it back if you go for both. I do know some lenders have been encouraging businesses to go for both. There is a simplified application on the SBA website. If for some reason you already applied prior to March 30th, you have to reapply. They sent out a message saying, sorry about that, but if you already applied, we now want you to reapply. There are additional funds available up to $2 million with approximately a 4% rate. And the thing about this is the terms are up to 30 years. The PPP has terms of 2 years. This is up to 30 years. So this spreads out the payment on a much, much longer term. And I do have the link here for the SBA website where you can apply. Now, the uses are for working capital, fixed debts, payroll, accounts payable, and other bills. So some of your operating expenses. It is not intended to replace lost sales, profits, or expansion. So loss of income is not an intended use of these loans. Personal guarantees are not required on loans less than $200,000. However, if you have collateral, it may be required for loans greater than $25,000. You cannot take that employee retention credit and these SBA loans both. So that credit for offsetting your payroll taxes that was discussed in an earlier slide, you can't use both. So this really has to come down to a tax strategy or a cash flow strategy for your business. And that kind of covers everything on the slides. Heather, should we take a look at some of the questions?
Yeah, so one of the big questions that came through related to the individual provisions was that if you had a college-age student that was claimed on the parent's return, but they also filed their own returns, will they get the $500? How does that work?
nobody gets it. If they are not child tax credit age, which is under age 17 as of December 31st, so basically 16 and younger, then that gets the $500 for the parent. If they happen to be age 17 or older, say you have a college student age 17 to 22, parent claims them, they file their own return, but they're still a dependent on someone else's return. The parent cannot get the $500 because they've aged out, and the college age student cannot get the $1,200 or the $500. So this has been a very well-known kind of chunk of population that sort of got left out of this act. So some CPAs are talking tax strategy for 2020 in not having the parent claim that student in 2020, where they are now independent for age 2020, and assuming that will reconcile on their return when they file for 2020 and get the money at that time. But you're not receiving those funds then for another year when you file your taxes. But unfortunately, that is a little bit of a known chunk of the population that got left out of the act.
Okay, second question that came in, I'm assuming regarding the individual provisions as well. It asks, what about deducting food and school expenses incurred during the time the students were back at home?
Those are personal expenses are never deductible on taxes. There is never been a deduction for meals unless it's a business related expense. So no, there are no deductions related to those expenses.
Okay. Then I have a question on childcare leave. Does the employee have to use up their vacation hours first?
They should not have to, because it was an expansion of FMLA. That is something I'm gonna write that one down. What this is it's allowing the employee to still get paid, and then the employer getting a credit for paying that employee. So how the employer is paying them is a little uncertain, if they're requiring them to use leave. So I think, the tax credit is written on the employer perspective, making sure that they're still paying these employees, but I'm not sure that it states specifically how that payment needs to be made or where it needs to come from, as far as if it needs to come from PTO or something like that. But I can look that one up, and maybe we can post a follow-up to some of these questions somewhere after on the extension website or something, Heather.
That would be great. We might do some of the frequently asked questions up here as an additional, article or something. So some other questions come in regarding either PPP or EIDL for self-employed individuals. It talks more about businesses throughout your presentation. So I've got questions, one's regarding like a beauty shop or child daycare and other, self-employed individuals that maybe don't have employees. It's just them.
Another gray area in the lending on this, and there's been a lot of discussion between CPAs on how to address this. Most are advising sole proprietors or Schedule C employees, or I'm sorry, business owners, not employees, to look at the EIDL. Because the PPP is a much larger scale, and it's really meant, just by the name, Paycheck Protection Program, to help continue paying your employees. If you're self-employed with no employees, and the PPP is calculated by using your salaries that you pay as a business, right? Well, if you're a sole proprietor, there are no salaries for your business. If you're a Schedule C, your own personal income is just a draw on the equity of the business. So a lot of CPAs have been advising to look at this EIDL, and in particular that $10,000 grant that could be forgivable. What you need to remember is that they're very specific about what these expenses, what expenses this money can be used towards. It is not intended as a replacement of lost income. None of these are. Both programs are intended to cover business operating expenses to keep businesses functioning through this period. So for example, a beauty salon rent would be allowable as an operating expense if you had to continue paying rent on a space, so that you could reopen hopefully soon, and those types of things. So specifically the SBA mentions that allowable uses of the EIDL are providing paid sick leave, maintaining payroll, meeting increased costs to obtain materials, making rent or mortgage payments, or repaying obligations that can not be met due to revenue losses, and it specifically excludes replacing lost income. So the PPP has more lending requirements and has personal financial statements required for application, those types of things. But it also is sole proprietors, independent contractors, and eligible self-employed individuals qualify, but there's been a lot of gray area of how you're going to do that when the expenses that you have to calculate for qualification are going to equal zero if you don't have any employees. So there's some consideration of, well, maybe when they wrote that they meant those sole proprietors that still have employees but they're organized as a sole proprietorship. So most of the communication that I've seen, and remember this is all about a week old, so things are changing, have been changing every day, has been encouraging those Schedule C's business owners to look more at the EIDL as a better option.
So we had some questions, and several of the individuals on our meeting today are farmers and ranchers across the state. Would either, it sounds like PPP, they might not qualify for at all. How about EIDL? Are there any available options there?
Yes, so the interesting thing about this is that generally speaking, farming does not fall under SBA, but they made exceptions in these programs. Again, you have to show that the funds are going to be used to cover operating expenses in this downturn. Actually, farmers can use the PPP, but again, it has to be, 75% or more of the funds received have to be used on the specific expenses listed. So the payroll, and you see some on the screen now with the mortgage interest and the rent or utilities, those types of things.
Okay, so there might be some availability there. Best bet would be to talk to your accountant and work with your lender to see what works for you.
Yes, you need an existing SBA 7A lender. And, a lot of the small communities around South Dakota do have SBA lenders. But if you are interested in the PPP, because there are limited funding, I would recommend you speaking to your lender.
Okay.
Yesterday.
Some of the other questions coming in. Do you have any information regarding the extra $600 UI benefit?
Extras.
And does that extra amount count as income when trying to qualify for welfare programs such as housing, SNAP, or daycare assistance?
I do not have that information. So you're talking about the unemployment insurance. I'm assuming I do not have the guidance on that yet. No, I've been focusing on the provisions specifically related to the CARES Act over the past couple of weeks. And that has kept me pretty busy with all the differences and all the changes in every day. It has more information come out on it. So I do not, but I can look that up. I do want to mention that there has been some talk, and nothing is, again, these are a week old, so we are still trying to disseminate all the information coming out on these, that there is potential that if you receive this $10,000 grant, or it's a loan advance, but it's considered a forgivable loan, meaning you don't have to pay it back. So they're kind of calling it a grant. But there is some talk that you may have to include it in income on your 2020 taxes if you receive it. Unsure yet, there's uncertainty, but keep that in mind as well. Again, including $10,000 of grant money as income may not, on your 2020 taxes, may not be the end of the world, especially if you need that money to support cash flows and keep you in business now.
Okay, one question came in about new businesses that maybe were started in 2019 or even in 2020. They weren't necessarily profitable in their first couple of years getting going. Do they use a January or February 2020 profit loss statements if they started making money like towards the end of 2019?
Well, the SBA EIDL grant is not even asking for P&L statements right now. If you're doing just that, now if you're trying to apply for up over the, up to the 2 million, yes, they will. If you're just looking to get this $10,000 grant to keep you floating, they're not even asking for that. It's a very simplified application. If you are applying for more funds than that, they will ask you for the specific years. You may have to do both, your 2020 to date and 2019, depending on how much you're applying for and what the lender is asking you for.
Okay. How about a spot where are the documents housed that need to be submitted for the PPP and the EIDL? Are those with the lender or are they?
With the lender. What's interesting is the information that I've been reading on the PPP. The lenders a lot are using their own lending portals for applications, and a lot of their own lending requirements, just like any regular business loan as far as applications. They, general tax return type stuff. And let's see, I did have some information about, trying to look through my notes here, some of the additional information that they were looking for. Credit bureaus, they might have asked for personal financial statements, personal and business tax returns, business financial statements for year to date, including scheduled business assets and liabilities, monthly sales figures, an explanation of the amount you are seeking and how it will be used, as well as the applications. So again, those are just, it's going to depend on the dollar amount of which you're seeking or applying for. The higher that dollar amount is, the more documentation they're going to require. But there are some, SBA requirements on that for 7A lenders. But a lot of the lenders are using their own specific underwriting policies as well.
Okay, we've kind of worked through all the questions that have been coming in. The main question that was asked several times, I guess, yes, this webinar will be available to you following the presentation today. It will be posted on the SDSU Extension webpage. So if you go to the SDSU Extension webpage and click the live or the Ag Business tab, it will be listed there. So you'll be able to find the information, have a way to go back for the different links that Vicki shared during her presentation. Those have all been included in the chat for you. Due to some security issues that Zoom has changed, the links are not live in the chat. You will have to copy them and paste them into your internet browser, just due to some of the changes that they've made lately. So that's one caveat that you'll need to remember there. At this time, I think we're going to maybe wrap up, say thanks again to Vicki for the information she gave us. These I did post in the chat as well. If you would like to keep up with SDSU Extension information, not only regarding the CARES Act, but all the other things that Extension does through youth and 4-H, families, and agriculture. Please sign up for our newsletters. We send out e-newsletters throughout the all year long regarding what's going on out in the industries that maybe affect you. So please sign up for those if any of those are of interest. And again, those can be found on the SDSU Extension main landing page if you scroll all the way to the bottom.
I also, Heather put my email address in the chat. Feel free to reach out. This has been very dynamic and changing from day to day. I'm involved in a lot of fun and exciting CPA chat boards and discussion groups on this where we're communicating every day. So if you have some specific questions that I can either answer or research for you, feel free to reach out to me at victoria.doubled@sdstate.edu.
All right, very good. We did have one last question came in about regarding the 2019 tax returns and their delay. I believe that was some of the first information Vicki shared with us. You want to just give us those dates again, Victoria?
Yep, the tax date has been extended to July 15th. So you now have an additional 90 days to file your return for 2019, which is fantastic. In addition, if you have a balance due, it is not due until July 15th. The IRS is still processing refunds through all of this. So if you were expected to get a refund, you don't have to wait until July 15th to file. You can file right away and they will get that process for you. If you need more time past July 15th, you can file an extension as normal, and that due date remains the same of October 15th.
Okay, I think that's the last of our questions that we had for you. So we will end the polling, and like Vicki indicated, she's willing to answer any individual questions. If you want to send her an email, she's willing to look those up for you. I guess one of the greatest take-home messages from today is to make sure that you do talk to your accountant or your CPA, whoever's doing your taxes for you as you work through this situation, and also work with your lender to see if they are SBA lender institutions, and we'll go from there.
Yeah, that if you want to, that EIDL loan, that application is very, very simple. I took a look at it myself just so I knew what people were going through in applying for that. There has been a slow response from the SBA on those, unfortunately, but the application itself is pretty simple, particularly if you're just looking to get that $10,000 advance. And again, the link will be available in the PowerPoints, and you can just go to the SBA website. It's right there on their main page. But the PPP, you will want to talk to your lender as soon as possible if you're interested in applying for that loan.
Okay, with that, I think we will end the webinar and say thank you all for attending, and best of luck to you as we continue our endeavor down the COVID-19 trail and wherever that leads us. Thank you.
Thank you.